Everybody, welcome to Intermediate Accounting 17th edition video solution walkthrough. This is for exercise 1622. This is from the textbook Intermediate Accounting 17th edition. Authors are Don Kiso, Jerry Weinget, and Terry Warfield. The question used in the presentation is copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. Okay, so let's go through and take a look at exercise 1622. So in 2019, Shahrokh Enterprises issued at par 60 $1,000 8% bonds, each convertible into 100 shares of common stock. Shahrokh had revenues of $17,500 and expenses other than interest and taxes of $84,000 for 2020, or $8,400 for 2020. Assume a tax rate of 20%. Throughout 2020, 2,000 shares of common stock were outstanding. None of the bonds were converted or redeemed. So the first question we're being asked is to compute diluted earnings per share for 2020. Note, we're going to also do basic because if we compute diluted, and if the diluted amount is higher than the basic amount, we're going to have to not show that amount. It's anti-dilutive. So we have revenues. And remember, our formula for earnings per share is going to be net income minus any preferred dividends divided by the weighted average shares outstanding. And this is EPS basic. And when we're getting into fully diluted, we're going to basically go down and add in some equivalents, but let's do the basic first. So we have revenues. Our revenues are $17,500. Expenses are $8,400. Now our interest expense is going to be how much? Well, we had 60 bonds at $1,000 par value. The rate of return on the bonds was 8%. So over here, the total amount of interest expense related to these bonds are $4,800. So my net income before income taxes is going to be $17,500 minus $84 minus $4,800. Over here, a total for $4,300. My income taxes are 20% of this amount. So my net income after tax is going to be $3,440. So the basic earnings per share is going to be $3,440 divided by 2,000 shares outstanding, or $1.72. Now, when we're getting over here into fully diluted or diluted, what we now have to go through and do is to assume what happens if these bonds converted. So if we have 60 bonds and each of the bonds here convert into 100 shares of common stock. So this is going to add 6,000 shares as a result of the bond conversion. And over here, we're going to add in 2,000 shares beginning. Are there other outstanding shares? So my total diluted shares for this particular calculation is going to be 8,000. Okay. So, but now the question becomes, if these bonds converted, would I have had to pay interest? And the answer to that question is no. So what I'm going to do is I'm going to add back my interest. So right over here, I'm going to have net income after tax of $3,440. Then what I'm going to do is I'm going to add back the interest expense net of tax. And so this is going to be 4,800 times 0.8 or 3,840. Where did I get 3,840? 4,800, which is the interest expense. So 4,800 is my interest expense. My tax rate is 20%. So over here, my taxes on this interest is 960. So my interest expense net of tax is going to be 3,840. Okay. So for my numerator, right over here, this is going to be 7,280. So over here, in terms of computing my diluted earnings per share, this is going to be 7,280 divided by my total diluted shares of 8,000 or 91 cents. Okay, so right over here, so that's the answer to the first part of the question. Okay, let's take a look. Assume the same facts as those of part A, except that the 60 bonds were issued on September 1st, 2020, and none have been converted or redeemed. Compute diluted earnings per share for 2020. Okay, so right over here. So right over here, essentially these bonds now were issued not in 2019, but they were issued in 2020. So how is this going to be different? Well, my revenues are still going to be 17.5. My expenses will still be 8,400. However, when it comes to the bonds, right over here, you have 60 bonds, par value. So this is going to be, though, this is for a full year. If the bonds were actually issued on September 1st, I'm going to multiply this value here by 4/12, and I'm going to get 1,600. So my interest expense is now going to be 1,600. So my net income before income taxes is going to be 7,500. My income taxes are 20% of that amount. So my net income after tax is going to be $6,000. So my basic EPS is going to be 6,000 divided by 2,000 shares outstanding, because remember, nothing's gone over here and converted. So this is going to be 6,000 divided by 2,000. So 6,000 net income divided by 2,000 shares outstanding. Now, for the fully diluted or the diluted earnings per share, what is this going to be? Well, for my diluted earnings per share, what I need to figure out over here is I need to say to myself, okay, so my net income after tax was 6,000. And then over here, I'm going to basically add back in my interest expense net of tax. So what I'm going to do is I'm going to take 1,600, multiply it by 0.8. So my net income diluted is going to be 7280. So that's going to be my numerator. Okay, so I'm adding back the interest expense net of tax. So over here, I've got 2,000 shares outstanding. Now, for these bonds, if the bonds were in fact issued, and it's basically, this is going to be 100 shares per bond. So this would be a cause of an issuance of 6,000. But these bonds were issued on September 1st. So I need to multiply this amount by 4/12 in terms of getting the shares that are actually going to be outstanding. So the shares from 9/1/20 to 12/31/20. So I'm going to take 6,000 times 4/12, and I'm going to get 2,000. So over here, I had 2,000 shares outstanding before. I'm going to have another 2,000 diluted, or basically if the bonds were converted. And so this over here is going to give me 4,000 total shares. Okay, so if the bonds were issued on September 1st, what would happen over here is I would basically say, okay, my net income is 7280, and I would be dividing this by 4,000 shares. So this is going to be 7280 divided by 4,000, or roughly $1.82. Okay. Now, for the fun one, which is the last one, we always are going to save the best for last. So let's go ahead over here and take a look at this final one. And let's see what we're going to do here. So assume the same facts as part A, except that 20 of the 60 bonds were actually converted on July 1st. Compute diluted earnings per share for 2020. So the first thing I would tell you is that, believe it or not, the answer is going to be the same as right up here. But let's go through and actually go through and compute it out. Okay, so right over here, I've got revenues, expenses. Now, in terms of interest expense, this is going to be interesting. What I'm going to do here is whenever I have a bond redemption, or if I have something like that happening, I always want to split it up. Okay, and so the way I'm going to go through and split it up is I'm going to have 40 bonds that were outstanding all year, $1,000 par value, an interest rate of 8%. Okay, so my interest expense over here is going to be $3,200 for the bonds that were not converted. Now, for the bonds that were converted, this was also at $1,000 par value, but my interest rate over here is I'm going to use 4%. And why am I using 4%? Because the bonds were actually converted on July 1st. So this is going to be 1/1/20 to 6/30/20. So over here, so I'm using half a year interest. So when I come over here and I multiply this through, I get 800 of interest expense on these 20 converted bonds. So my total amount of my interest expense is going to be 3,200 plus the 800. And if you kind of think about this, if I look at the interest expense that I had over here, this kind of makes sense because, you know, have on 20 of the bonds, the interest expense for the other half of the year would be another 800. And that's where that 4,800 would be coming through. Okay. So my net income pre-tax is going to be 17.5 minus 84 minus 4,000. My income taxes are going to be at 20%. So my net income after tax is going to be 4,080. Now you might be asking Tchaikovsky, why are you going through and doing this? Because the answer is it's fun. I'm just kidding. No, the answer is I want to make sure that the diluted earnings per share is not higher than the basic earnings per share. So my basic earnings per share for this is going to be, the numerator will be 4,080 net income divided by how many shares outstanding. Well, if we have 20 converted bonds, these were converted into 100 shares of common stock. So when I converted 20 of the bonds, these converted to 2,000 shares. However, these 2,000 shares that were issued were not issued for the full actual year, right? Because these were issued, these were converted on July 1st. So for my purposes, I need to multiply this by 6/12 because this is going to be from 7/1/20 to 12/31/20 because it wasn't outstanding for the full year. So this is going to be 2,000 times 0.5 or 1,000. So in terms of my weighted average shares for basic earnings per share, this is going to be 2,000 plus 1,000 as a result of the bond conversion. So this is going to give me a total of 3,000 shares. Okay, so my basic earnings per share is going to be 4,080 divided by 3,000, or roughly $1.36. Okay, so now if we go through and let's just kind of take a step back for a second. So my net income was 4,080 and I've got 3,000 shares now being outstanding. Now, what happens? How do we go through and do the fully diluted? Okay, so for my diluted, what I'm going to do here is I've got revenues, those haven't changed. Expenses, right? So let's just go ahead and start over here. So we have net income after tax is going to be 4,080, right? And what I would go back through here and do is add back in my interest expense. Okay, so my interest expense is going to be 3,200. Or this is going to be 4,000 times 0.8. So my total net income with the interest add back for purposes of fully diluted earnings per share is going to be right over here at 7,280. So this is going to be a 7,280 net income. Now, in terms of going through and figuring out the number of shares that I have over here, well, how many shares would have gone through and have been issued, right? So we know that we've got the 3,000 shares outstanding. We also know over here too, is that these 40 bonds would have been 100 shares. So for a total of 4,000 shares, and we'll call this the unconverted bonds. This is my weighted common shares outstanding. Okay, so this is my unconverted bonds. For my converted bonds, all right, we have that period of time from January 1st through June 30th. So we have 20 bonds, 100 shares of common stock, And this would have been a result of 200 shares issued as a result of that. However, we're also going to have to multiply this by 6/12, right? And this is going to be from 1/120 to 6/30/20. So this is going to be times 0.5 or 1,000. And this is going to be called as converted bonds from 1/120 to 6/30/20. And when I add this up, I'm going to get a total of 8,000. So for my diluted, this is going to be 7,280 divided by 8,000. So this is going to be 7,280 divided by 8,000, or a total of 91 cents. So this is a lot. But again, it's the key thing with these kind of questions is you really want to try to separate out as much as you can these different items. It's just going to make it easier to kind of visualize as you go through and do these questions. So I want to thank Wiley for allowing me to go through and to share this with you. And don't forget to like and subscribe. And I look forward to seeing you on the next video. Have a great day.